Good day Forex trader. Your USD Forex signal, patterns point to bearish breakout. There is a likelihood that the pair will have a bearish breakout, with the next support at 1.1250. Bearish view. Sell the Euro USD and set a take profit at 1.1250. Add a stop loss at 1.1400. Timeline, 1 to 3 days. Bullish view. Set a take profit at 1.1355 and a take profit at 1.1400. Add a stop loss at 1.1300. The Euro USD pair is in a consolidation mode as investors assess the overall divergence between the Federal Reserve and the European Central Bank, ECB. The pair is trading at 1.1345, which is about 1.255 below the highest level last week. Fed and ECB divergence. A key theme in the market recently is about the divergence between the ECB and the Fed. The Fed has already made it clear that it will start hiking interest rates this year. Officials have hinted that the bank will implement 3 rate hikes this year. But they have also not ruled out implementing more rates than that in their bid to curb the rising inflation. On the other hand, the ECB has hinted that it will maintain its policy for a while. In a statement last week, Christine Lagarde said that the bank was still data dependent and was not committing to do anything. That statement came shortly after data from the country showed that the headline Consumer Price Index, CPI, jumped to a record high of 5% in December. The main catalyst for the Euro-USD pair today will be the latest flash manufacturing and services PMI data from the EU and the US. Analysts expect that the two sectors held steady in January even as the Omicron variant caused havoc in the two sides. For the Eurozone, analysts expect the data to show that the manufacturing PMI rose to 57.5 in January while the services PMI rose to 52.2. On the other hand, for the United States, analysts expect the data to show that the manufacturing and services PMI rose to 56.7 and 55.0, respectively. Still, these numbers will likely not lead to substantial volatility on the pair. Euro USD forecast. The 4-hour chart shows that the Euro USD pair declined sharply last week as a risk-off sentiment remained. The pair is trading at 1.1345, which is 1.25% below the highest level this month. It crossed the key level at 1.1350, where it had struggled moving above in December. The pair is also slightly above the rising trend line shown in blue. A closer look shows that the pair has formed a head and shoulders pattern. Also, on the daily chart, the pair has formed a bearish pennant pattern. Therefore, there is a likelihood that the pair will have a bearish breakout, with the next support at 1.1250. GBP USD Forex signal, bears prevail. The pair will likely drop to the 38.2% Fibonacci retracement level. Bearish view. Sell the GBP/USD pair and set a take profit at 1.3420. Add a stop loss at 1.3650. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3580 and a take profit at 1.3650. Add a stop loss at 1.3500. The GBP-USD pair downward trend continued on Monday as investors reacted to the overall risk-off sentiment and the weak UK retail sales data. The pair is trading at 1.3555, which is about 1.45% below the highest level this month. UK retail sales data. Last week, the UK published mixed economic data last week. On Tuesday, the UK published strong jobs data. The numbers showed that the country's unemployment rate declined to 4.1% in November as the recovery continued. On Wednesday, the Office of National Statistics, ONS, revealed that the country's inflation continued rising in December. The headline consumer inflation rose to 5.2% in December while the core CPI retreated slightly. However, on Friday, the UK published weak retail sales data. The numbers showed that the country's retail sales declined sharply in December as Christmas spending cooled. Retail sales declined by 3.7% between November and December. That decline was significantly lower than the median estimate of a 0.6% increase in December. This decline was mostly because of non-food sales that declined to about 7.1% in December. Still, analysts expect that the Bank of England, BO, will continue hiking interest rates this year. The next key catalyst for the GBP/USD will be the latest manufacturing and services PMI data from the United States and the UK. Analysts expect the data to show that the UK manufacturing and services PMI in December. Market will also publish relatively strong PMI data. Still, these numbers will likely not have an impact on the GBP/USD pair. The pair will then react to the latest consumer confidence data, which will come out on Tuesday. Economists expect the data to show that consumer confidence declined from 115.8 in December to 111.8. GBP/USD forecast. The GBP/USD pair declined to a low of 1.3555, which is about 1.45% from its highest level this month. It has moved below the 61.8% Fibonacci retracement level. The pair has also moved below the 25-day and 50-day moving averages. The two lines have made a bearish crossover, which is a bearish sign. The MACD has also been in a strong bearish trend. Therefore, the pair will likely drop to the 38.2% Fibonacci retracement level. Therefore, this drop will be invalidated if it moves above 1.3600. AUD/USD Forex signal, more sell-off likely as bears prevail. The pair will likely keep falling this week as bears target the support at 0.7100. Bearish view. Sell the AUD/USD and set a take profit at 0.7100. Add a stop loss at 0.7250. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7200 and a take profit at 0.7300. Add a stop loss at 0.7100. The AUD/USD pair crossed an important support level as investors embraced a risk-off approach ahead of the upcoming Australian consumer inflation data. The pair declined to a low of 0.7175, which was the lowest level since January 18. Risk-off sentiment. A risk-off sentiment has returned to the market as investors worry about weak corporate earnings and the possibility that most central banks will embrace a hawkish tone. In the past few days, American and Australian equities have slumped. The same trend has happened in the cryptocurrency industry, where all cryptocurrencies have declined sharply in the past few weeks. Bitcoin is solidly below $40,000 while the total market cap of coins has dropped to about $1.8 trillion. After 2 straight years of an expansive monetary policy, analysts now expect that the Fed and even the Reserve Bank of Australia, RBA, will start tightening this year. The Fed has warned that it could be forced to intervene more aggressively this year. It will do this by ending its quantitative easing policy and then raising rates at least 3 times this year. Meanwhile, the performance of Australian bonds has also hinted that the Reserve Bank of Australia, RBA, will also start tightening this year. For example, yields of the 10-year government bond yield has jumped to 1.88%, which is the highest it has been since December last year. The economic calendar will be a bit muted today, so investors will continue to assess the risk situation. Market will publish the latest manufacturing PMI data from the United States. Analysts expect the data to show that the two sectors did well in January even as the Omicron challenges remained. On Tuesday, the Australian Bureau of Statistics will then publish the latest consumer inflation data for the fourth quarter. Analysts expect the data will show that the headline CPI rose to 3.2% in Q4. AUD/USD forecast. The 4-hour chart shows that the AUD/USD has been in an ascending channel that is shown in black. Now, the pair has managed to move below the lower side of this ascending channel. At the same time, it has dropped below the 38.2% Fibonacci retracement level. It has also moved below the 25-day and 50-day moving averages, while oscillators like the Relative Strength Index, RSI, and the MACD have moved lower. Therefore, the pair will likely keep falling this week as bears target the support at 0.7100.